Futures are pointing higher this morning by quite a bit in Europe, but flat in the US. We seem to be waiting for the retail sales data, I read, in many places today. Have you ever seen so much focus on retail sales?
No, this is unbelievable that going into the Fed meeting with a decision tomorrow, we're literally dependent on this retail sales data. It does feel like a very manufactured event. And for most of the last few weeks, or the last couple of months, I've thought that, of course, the Fed should do 25 basis points and that more than 25 basis points would be bonkers. I now think that given the messaging of the past week and given the pricing, that it might be more problematic if they don't deliver the 50 basis points that the market has been guided toward. So the last impact here will be this retail sales. That'll make a big difference. If we're pricing more than 40 basis points by tomorrow, then the Fed will deliver 50 basis points. If we're pricing less than 35 basis points by tomorrow, then I think they'll probably stick with 25 basis points. The fact is, the Fed rarely likes shocking the market. Now, there is a window there between 35 and 40 where I don't know what's going to happen, but I think retail sales will give us that conviction either way. And if retail sales comes in line, I do think we'll keep on drifting closer to that 50 mark.
Mark, do stocks go up or down with 25? Do stocks go up or down with 50?
Look, I think that given the pricing we've had now, markets, the equity markets have done well because they're getting priced towards that 50 basis points, and a bunch of the market think that that's ridiculously overdone. I know there's another part of the market that thinks the Fed's massively behind the curve and they should do at least 50 basis points. So stocks have already rallied on some of that speculation, 50 basis points. I think from here, and my answer might have been different a week ago, I think that the equity markets do much better on 50 basis points on the knee-jerk. I think that they'll be disappointed by 25 basis points on the knee-jerk. Now, the slight two counterpoints are that if retail sales is super strong today and we kind of show how ridiculous the whole conversation about 50 basis points was, well, then maybe equity markets do fine with 25. But otherwise, I do think that equity markets just want the easier policy.
So for the bond story, have we seen the bottom for two-year yields?
I think so. Well, sorry, I think we see it this week. So I think that if they deliver 50 basis points and a dovish dot plot, as we seem to be heading towards, I think we get another knee-jerk move lower in yields. But two-year yields are pricing in a Fed easing cycle that we only get during a crisis, whether it's the global financial crisis or the pandemic. And I am just not seeing that bogeyman on the horizon to force the Fed to this just a really, really aggressive rate-cutting cycle when inflation is not definitively under control. So, yes, I think the two-year yields bottom this week, maybe at the latest early next week, and they have upside into year-end. How much upside will depend exactly where the Fed is. But I think the risks are very asymmetrically skewed between now and year-end for two-year yields.